The fade trade paid. The fade trade working overnight in both directions, folks. We're going to talk about what this is, what this means, how you might be able to use it in some of your trading and investing strategies. Of course, we'll get an update on conflict in the Middle East overnight. Oil, around $74 here. Bitcoin getting a little bit of a pop. We're going to talk about earnings like CrowdStrike, maybe Abercrombie Fitch, maybe little Roth stores. We'll give a little preview for earnings coming up here the rest of this week. OpenAI with a headline that might be putting the company ChatGPT in direct competition with Microsoft. Implications for GitLab, maybe also JFrog. Moderna with some litigation news overnight, and Target announcing a growth plan here that Wall Street seems to be liking. At least analysts are liking it. A few ratings that we'll get to, folks. Our guest at 8:35 a.m., Laura Chico, Biotech, Managing Director of Equity Research over at Wedbush. For anyone affected by the conflict over in the Middle East, we are thinking about you and praying with you and giving our condolences. Anyone negatively impacted, folks, let's get it going here on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Stocks this morning here getting just a little bit of relief. We're looking at the SPY trading up a few tenths of a percent. Let's take a look at the Qs here. This morning, are the Qs trading lower? I don't know if the Qs are trading lower here. Qs are trading higher here this morning. Not sure what's going on with the chart on screen. Take a look at the IWM trading up 0.5%. We'll do crude oil up about, actually trading down about 0.2% here this morning. Gold, GLD, gold trading up, looks like 1%, about 1.5% or so. Silver SLV this morning trading up a couple percent. And Bitcoin, which we are going to take a little bit of a dive into a little bit later here this morning, getting some relief, trading up about 5% over the 71,000 level here this morning. Let's bring in Triple D. Triple D, how's your morning going?
Still fight the flu/cold, whatever it is, but slowly get better. I'm still nasally, so please ignore the nasally voice here as we continue to trade these volatile markets. I want to acknowledge Amethyst. Sounds like, obviously this war, we think about it, on this show, a lot of times, we think about it as a trading, what's going to happen with my money, what's going on. There's real people fighting over there, this real war. And Armitage, I want to give you condolences here. Hopefully your son's going to come back, but apparently his Marine unit was one that got hit. His son's Marine unit got hit this last night. So we want to acknowledge that. There's real people fighting, in this war here, and we feel for those families. It's just an awful thing when you lose a family member, or if you have the potential to lose. Hopefully your son can come back safe.
Well said, Dennis. Thanks for saying that. Appreciate it.
So, the war trade is one thing here, and this is what is on. Obviously, it's bouncing. It's headline-driven market here. The headlines are crazy, and it's continuous. So if you look at the SPY chart from last night and bring it up, just bring up last night's trading. It was all over the place. So if we we went up, we were up 20 handles, then we lost 20 handles, then we came back to scratch, then we went overnight, lost 50 handles overnight, then we come all the way back up, we were trading higher, then we recently sold off, now we're trading back higher here again. It's a yo-yo market driven by every headline, as we get, it looks like, something else getting hit a target, stocks sell off. You do have Trump talking about potentially talking. And there's rumors, none of this has been confirmed. We don't know what's happening, but that Iran wants to talk. Trump has said he's willing to talk, apparently, in social media. I have not got confirmation of that, but that would have probably been why we rallied a little bit here about 4 a.m. So European markets have also had a relief pop. They got hit really hard yesterday. International markets were just destroyed. It's the bit worst day for international markets that I've seen in a long time. If you bring up something like the VXUS, which
VXUS.
which encompasses all the different international markets.
Okay.
That was down as much as 6% yesterday, just one day. Had almost a 10% sell-off over the course of 2 days. This after, being one of the strongest, being up 12% on the year, giving it all back in 2 days. So we have had that dead cat bounce, a little bit of relief pop. EEM, same story, emerging markets. Starts the year, EEM around 55, runs up to 63, and then bang, in just 2 days, we give 2/3, almost all of it back, actually down to 56.74 yesterday. Relief pop here once again, but these markets are going to continue to trade on every single headline that we're seeing come out of the Middle East.
And let me give a few of the updates here. And then I think it was Jay that was asking about the fade trade. And we'll get into that in just a sec, because the fade trade can go both ways. Fading trade one way, fading a trade the other way. Overnight in the Middle East. So actually later yesterday, one of the largest, actually the U.S.'s largest military base in the Middle East in Qatar, the Al Udeid Air Base, was hit. Also hearing reports yesterday that U.S. is arming Kurdish forces in order to, incite revolt against the regime. We heard that Israel is blowing up Iran's police force deliberately in order to clear a path for some of that revolt. Trump has said that the U.S. will protect tankers passing through the Strait of Hormuz, will use the Navy for that. And then, Dennis, what you were saying about Trump, the major papers this morning are saying there was like a secret outreach. That's the phrase that they're using. That's the phrase that you'll probably hear this and into this afternoon. And I think you might have mentioned it, but just say it again. Trump said Iran wants to talk and that he's willing to talk. So that seemed like it was earlier, and that may have been why we were rallying. Certainly in oil. Oil moved higher. Let's see here real quick as I pull up a chart. Oil moving higher earlier this morning. We have given back some of those gains in oil, but this seems like a little bit of easing on the aggression, and we can see oil moving lower on that here this morning.
Yeah, I mean, this is a headline-driven market. In some markets, in lower VIX, you're in markets where technicals are driving the bus. And what the chart looks like, ooh, that's a nice looking chart. That stock's probably going to break out. Oh, there's some analyst action over on this stock. Oh, that's a cool individual stock story. That is not the market we are in here right now. We are in a completely macro-driven tape where it's all about what the next headline is. Headlines, folks, are building these charts right now. So I don't care what the chart looks like. If, all of a sudden you get escalation, something happening over Middle East, stocks are going to go down. If you get de-escalation, something about talks, stocks are going to go up. That is all that matters here right now to the overall market, and it's driving the bus for everything. I mean, yesterday morning, we had everything sell off. We haven't seen that in years, where we had the breadth, but Money Mitch was looking at 85% of the stocks were down at around 10 a.m. Now, obviously, we had a nice bounce. We snapped back, buy the dip came in here again. But, you can tell when the VIX starts rising, all stocks start moving together. They start getting correlated. A stock is a stock. They just all start moving together. Even to the point where oil yesterday was up substantially, yet ExxonMobil and Chevron turned around, gave it all back, and went red.
Yeah.
Why? Because they're stocks. So at the end of the day here, they were just selling stocks yesterday morning. Now, they came in afternoon. They can't stop themselves. The money manager who's playing with other people's money come in. The institutional money manager comes in, buys the dip relentlessly. That has been rewarded for a decade, maybe 20 years since we've had the financial crisis. So how do you break that mentality of, the dip buy being rewarded? I don't know if you do. I don't know if you can sit back and just say, oh, yeah, let's, just not buy the dip anymore here because eventually it's not going to work. I mean, it's worked for 20 years. We have not had a serious bear market since 2009. We've had small, short deranged,
Duration.
Duration.
What's that word?
Deranged too. That's one of those Freudian slips, folks.
Yeah.
But this is the market's mentality here. That every dip I buy, I get rewarded. So why am I going to stop buying the dip?
And so, yeah, let's. And by the way, I forgot to say thanks to TradeStation for sponsoring our charts. Born to trade, chart, analyze, customize, all in one platform. The charts that we do share on PreMarket Prep are TradeStation charts. And Dennis, like I said, we had a good question on the fade trade. The fade trade isn't necessarily fading a move higher. You can also fade a move that
Yeah,
is going lower. How
yeah.
how does that work in your opinion?
Oh, I consider fade trade just like buy dips and sell in reps. That's where I've always been. I've considered that. That's been the strategy that has worked in this market forever. Like just continuously buying the dip has been the best strategy the market's seen in the last 20 years. But also selling reps. We're back into this market where 2021, when markets were going relentlessly higher, you didn't want to sell any reps because stocks just built and built and built and built and built. But we've kind of been in a fade trade market here for the better part of 6 months. I mean, the Qs have gone nowhere, the SPY has gone nowhere overall, well before the war started. We're just kind of just meandering, value stocks going up, growth stocks coming down, but overall the market just kind of chopping around. So how do you make money in choppy markets? You buy dips and you sell rips, or you short rips and you buy dips. That's still the formula for trading a market that's driven by war headlines, because some are going to be good headlines, some are going to be bad. You got to be paying attention to them, obviously. But I mean, if you're just blindly buying dips and short rips right now, you've been killing it for 6 months, really.
Yeah. And to your point, Dennis, the dramatic nature of the moves in the market is what is being faded. We see these monster moves higher, and then the move is faded. We see these monster moves lower, probably overdone, and then that dramatic move lower is kind of faded to the upside, buying the dip in that way. We have a couple examples, I think, last night that we saw on some of this fade move working. But I want to just touch on Bitcoin here real quick, because we did get a few questions on, like what's going on with Bitcoin today? Why is Bitcoin getting some kind of relief here? Thoughts on Bitcoin here this morning, Triple D?
Well, I gave my thoughts yesterday, and I said I kind of like the chart, I kind of like the setup. I just got to tell you, charts don't matter in this market here, though. But you just had a huge consolidation station. I mean, place your bets. That's what you do when you're in consolidation station. So we talked about the show yesterday morning. That continues. So now we get a breakout to the upside, a relief rally. I mean, Bitcoin's been massively oversold and consolidating here. So I don't mind. Like I said yesterday, I didn't mind if you were taking a shot. Stop yourself out the lows at 35. You could have bought IBIT yesterday at 37.80, I think it was. Closed at 38.70. Now it's up 40.48. So you're up almost 3 points here on the IBIT in 1 day since we talked about it yesterday. So, would I be building it and adding to it here? No, because that's a buy the dip, sell the rip market. So I'd probably be selling into this strength. So if you had Bitcoin, I own it in my long-term account. But if you had it out for a trade, I'm probably lightening up into this, because it's the market where you take the gains or the market takes them from you. That is a contrarian market.
Say that again. That was great.
In a contrarian market, you take your gains or the market takes them from you. What does that mean? Your gains eventually erode away and the stock goes back down to where it was. That's the type of market that we're in. I think that market continues, folks. I think we're just set up to continue in that market. So I am not of the belief that this market's going to explode higher and this is going to be the biggest bull market we've ever seen. The uncertainty with AI, which we aren't even talking about this week because the war trade is on, but the uncertainty with AI still remains, which brings us to, like last night, once again, another headline. OpenAI headline here, Brentster, comes out. Just flying under the radar because, again, we're talking about the war trade. But OpenAI is in early stages of developing its own code repository with completion still months away. Companies considering making it available to OpenAI customers, put ChatGPT in direct competition with Microsoft. There's also was another headline, I'm not sure that was it, but working on something with GitHub, if that was all tied in there, Brentster. But if you saw GitLab here last night and this morning, down significantly. That is off the OpenAI headline. Frog, which also has a relationship with GitLab and GitHub, which is Microsoft's product, is down 4% here this morning. Microsoft trading slightly down, was and has turned higher, but Microsoft's so diversified it's a drop in the bucket for them. But a direct attack on GitLab. So, I mean, we keep continuing to see AI disruption. Today, GitLab is the victim, flying under the radar.
Want to just pull up a little chart of IGV here, because this, of course, has been the main way that we've been watching the AI disruption story, and getting just a little bit of relief here this morning. You want to get to earnings, Triple D?
Yeah, and again, I apologize for the nasally voice. It's this voice, or I took last week off trying to get better. I have no idea if my health, folks. I'm trying my hardest here, but my immune system
Who
completely agree just sucks. I can't fight anything off.
who in the chat is making fun of
Everybody's
your
mad that I'm
nasal voice?
nasally.
Oh my gosh, you sound fine, Dennis. It's got to be
I'm
worse for
definitely
you than it
stuffed
is
up.
for us.
I've blown my nose. Honestly, I went through 2 tissue boxes yesterday, so that's 200 nose blows. So I'll blow it. It's just there again. It's just completely plugged up. Ears are plugged. Can't hear. Nose is plugged. But you know what? The show must go on. So,
Yeah.
I want to give commentary for you guys. I want to give you trading ideas. I feel like I give you good trading ideas. So that's why I'm here to give you the trading ideas. You're going to have to ignore my nasally voice. I'm going to the doctor again tomorrow. I've been there already twice to try to figure me out, but it is what it is.
This poor guy.
It's long COVID is what it is. I've been sick for like 2 years. I just basically got long COVID. I just fight through it. ADP just came out.
This poor guy is here battling sickness to give y'all trading ideas. You will give him some credit, chat. I'm looking at you.
I'm trying, man.
Did ADP move the market? Nah, I've kind of been ignoring ADP, but our ADP employment change was 63,000 jobs. The forecast was for 50,000 jobs. Nothing really to write home here about. We do have jobs report on Friday. That's going to be the focus. We'll get initial jobs claims tomorrow leading into that report, but Friday is the focus when we're talking econ data. I have the CrowdStrike chart on screen right now. I want to give you the CrowdStrike results. And we'll see. I think I had a couple little bits of analyst commentary here on CrowdStrike. Report was fine, I would say. They reported earnings of 112 versus a 110 estimate. Sales coming in 1.3 billion. Analysts were around 1.3 billion. The guidance was in line also, both for the quarter and for the fiscal year. They're expecting Q1 earnings 106 to 107. Analysts at 106. And for 2027, they're expecting earnings 478 to 490. Analysts at 482, largely in line report. And the stock here this morning also looking largely in line.
Fade, trade, market. This is the same thing. Stock reports goes up 15 to 404, then tags 50 points down to 370, comes all the way back to 392. What? And then you hear that sucking sound, just sucking the premium right out of all the options there. If you're sitting here and buying calls or buying puts on your stocks, and like, oh, I'm gonna rake in some money. That's not for the fade trade. That's for momentum-driven markets. Fade trade, sell premium, sell options, fade moves. The person who is selling you those options, those CrowdStrike calls and puts that you bought yesterday, they're raking it in, man. That's the market that we're in. The fade trade market says sell options, don't buy them.
Analyst commentary here after the CrowdStrike report was mixed, but mostly favorable. I got a couple notable comments here from a Bernstein analyst, a Morgan Stanley analyst, and a JP Morgan analyst. Bernstein saying the company with its report offered signals net new customer growth is finally reaccelerating. Morgan Stanley saying it sees tailwinds from AI for CrowdStrike. And JP Morgan saying it's seen evidence the company is going to be able to leverage incentives and accelerate market penetration and also consolidate market share. Despite that, stock pretty quiet here this morning. Abercrombie, Triple D, you want to move on?
Same thing. We pop initially on the report, was up last night. Look, the fade trade just working like a charm on everything. I mean, this stock went up to 110 on the initial report because the algos are so stupid. They go 105, 106, 110. Oh, yeah, man, let's go 120 with 30 algos. Let's go. Stupid algos aren't programmed for fade right now. They're programmed to continue. So they're wrong. Sell them. And you know what? 110, 108, 106, 104, 102, 94. Now they're like, oh my God, why are we losing so much money? This was a good report. Because in the market, where the reports don't even matter, it's all just about fading moves. So continue to trade with the fade. You're going to make some money, all likelihood. ANF now dipping. So if you sell it down here, you're doing it backwards as well. So I think like $90, 91, good support down there. Probably find some support there. But that's just the market that we're in, folks. Do not chase in this market environment.
Should I read the results? I'll read the results. Company report Q4 earnings 368 versus 357. Fine. That's fine. Yeah, it's a little better than expected. Sales were in line at about 1.7 billion. Guidance was in line also. They're expecting 2026 sales 5.4 to 5.5 billion ish, and analysts around 5.49 billion. So report was decent. Guidance was in line. They're fading it here this morning after I see one. Yeah, you're right, Dennis. 110.08 was the pre-market high.
Stupidity.
Dramatic moves everywhere.
Dramatic stupidity is what that is. Also, we had Ross Stores last night report. It is up. Ross is one. So not all things are created equal here. Ross is one that is absolutely loved by this market. Why? Because it's an off-price retailer. We know we have Ryan Craver on all the time, who has had this call on our show for the last 5 years. He's been coming on our show, maybe longer than that. Off-price is loved. Who are your off-price retailers? TJX, Ross Stores, Burlington. Why are they loved? Because people want name brands at a discount price. That's what you go in there and get at Ross Stores. That's what you go in there and get at TGX. That's what you can go in there and get at Burlington Coat Factory. I still call it the Burlington Coat Factory. Those stocks are eternally loved. So when those stocks dips, they almost always are buying opportunities. Am I buying a Ross Store rip? No, but I don't know if I'm going to necessarily short it because it's the kind of stock that just people love. And I hate shorting stocks making new all-time highs. So one rule, fade trade works well, but I do not like shorting stocks that are making new all-time highs. And Ross Stores is making a new all-time high right here, right now.
You know, people like to feel thrifty too. Like when you go into like TJ, you know, when you go into a TJ Maxx and you are looking, you're looking through a ton of shirts. Yeah. They're all different. And you're like, what the hell? Why am I looking through all this? And then you pull one out and you're like, this is a nice shirt. This is $15. Heck yeah, I just won. So there is, you know, something to that experience besides just the fact that people are saving money, I think, which is interesting.
I think so. Like people, thrifting's going to continue to be a thing because I really truly believe that AI is going to continue to make the gap wider. More people, you know, we're talking about the income gap. You know, obviously there's, you know, people who make a lot of money. The rich are always going to be super rich. They're going to do what they want. It's that middle class that might get pushed down. You know, if we do have some job disruption, some of the white collar could get pushed down a little bit too. People got to be a little more thrifty to make ends meet. So I don't think thrifting is going to go away. That's why stores like Ross, TJX, Burlington probably continue to make a hell of a lot of sense.
And there's another stock that we talk about in the thrifty space, and I'm not going to mention it because this is a tease for STN, folks. It's a stock we talk a lot about in STN.
It's been up and down. I know
nothing to get super excited about, but it is an interesting idea. A little tease there for the STN, StockTraderNetwork.com.
Come give us a tryout. You know, test it out there. We try to give you as much trading ideas as we can. All that is that's their think tank. We're just trying to give continuous trading ideas from all kinds of different people. Marty Mitch, obviously, there. We got Chris Bretcher, obviously Joel, myself. You know, Chip Tassoni comes in. I mean, there's so many regulars that are in there. Trader Pratt just kills it in there as well. So, I mean, so many great traders that we have in there all the time.
CC, of course. CC, we have options unchained. We have options unchained. Yeah, absolutely, Dennis. We have options unchained today, Wednesdays at 1:30 p.m. But also CC has like a special guest spot on Fridays. That's just for the STN. Get a little bit more intimate, get to ask him some more questions. And Michael Feehan making us a lovely earnings calendar for this week. Wanted to pull this up and take a look and get a little insight into what's going to be happening later today. Broadcom is our big name tonight, ticker AVGO. And also we're going to be getting also in tech, Marvell tomorrow afternoon, MRVL. Triple D, any setup into Broadcom here tonight or any other earnings on the calendar
Broadcom's
that you want to highlight?
The bus, and it has the potential to drive the bus, you know, for the overall market here. Macros, reward trade's going to continue, but eventually that will fade too. And then you're left with tech earnings. I mean, you know, Broadcom's one of the top 10. So, you know, it's not like an NVIDIA, but it's big. The stock has kind of just been in the gutter. So it does have actually a pretty low bar, and I think they can get over it here. So I don't mind Broadcom. It's kind of been out of favor for a while. I mean, it's had such an incredible run. You know, we were April, we were $139, and we went to $414. It just got way overdone. Now it's starting to come back in. The valuation at one time was very reasonable to AVGO. It was trading at 18 times earnings, you know, at the bottom of April of last year. Now it's come up so far that, you know, the valuation has stretched. It's 65 times current earnings, but I don't like looking at current.
Okay.
I like looking at
You look
forward. It's
forward.
31 times forward. 31 times forward is not cheap right now in this market, though. When you got NVIDIA sitting there at 17 times 2027,
That's true.
it's hard to pay 31 or 32 times for a Broadcom. So, I think on dips, I think, it's an interesting stock, but I think the bar sets up okay, but it's still not really cheap.
And
This
tonight when
market likes cheap stocks. This is the market we're
certainly.
in.
Tonight when Broadcom reports, we are going to be looking for earnings about $2, sales around $19 billion. And just looking at the chart here, when we talk about the bar and the setup, basically just talking about the performance going into a report. And, Broadcom shares have pulled back a good $80 here heading into the report. So something to keep in mind. You want to just pull up Marvell real quick, Triple D? Do a little preview for Marvell.
Do Marvell. I recently bought Marvell in my long-term account. Why? It's hardware. I do think, the recent dip, I'm in from right here. It's like $78. So it's it went up a little bit, then it dipped yesterday and I'm back down in it again. I like the Marvell setup. Marvell actually isn't that expensive here either. So you're talking about a company makes a lot of hardware for technology. Here it's 23 times earnings. So it's not crazy cheap, not crazy expensive, basically at a market multiple. But I mean, there's just demand for hardware here is going to continue. So I feel like Marvell is still in a good place. There was rumors of takeout, back in November of this year or last year. I don't know if that's going to happen here or not, but I don't mind it down here at $78. We'll see how it does. I did calculate the expected move, but
me too. I got it. It's $8.50.
Yeah, so that would bring us down to 70. Great support down there. So if we could get down near that $70 range, I think you find buyers. I also think you find potential, sellers here. If the stock pops up $7, $8. Why? Because we're in the fade trade market. So I mean, that's where we are. I still don't think this market is like, okay, get ready. You got to build your portfolio right now because we're going to go up 30% by the end of the year. I still think we're in that market.
Marvell, we're looking for tonight when they report, we're looking for around 80 cents in earnings per share. We're looking for sales around $2.2 billion for Marvell.
Awesome.
You want to go to Moderna, Triple D?
Yeah, do the Moderna news because this is a big mover here this morning. Give us the headline here, Brett. I'll give you some technicals.
Okay, cool. Give me 1 second. Let me just pull up the chart here real quick. Okay, so last night, Moderna and a couple other companies were involved in this, resolving global patent litigation with Arbutus and Genevant. Moderna, let's see, click and open the press release. Moderna will pay $950 million with no future royalties to resolve all global litigation. They are expecting this charge in Q1 of 2026. Moderna is saying that 2026 year-end cash and cash equivalents now expected to be about $4.5 to $5 billion. And I'm sure that there are some traders out there who are saying, wow, that's kind of a lot of cash for Moderna to be paying. But the main thing is that we now have this overhang that was, clouding some of the outlook here for Moderna has just been removed. And when we have those kind of overhangs removed, it's generally a favorable thing for especially biotech names.
Not selling off. Like I was trying to play this with the short side off 55 last night. It just really wasn't responding. It sold off a little bit here. I have no position on it now. It's major technical resistance. We got there January 55.20. We got there 54.93. I mean, we're in the fade trade market, but it's good that it's holding up. I would have thought it would have faded faster than this. So holding up is a good thing. I would say, though, guilty until proven innocent. I wouldn't want to buy this thing up. I'm just not chasing moves up 9-10% this market. And Moderna's kind of been in the gutter. It's obviously come back over the course of the last 3 months because value stocks, and Moderna is not necessarily a value stock, but at one point in time was making a lot of money. They could get back to making some money, and that's not going to happen anytime soon because the COVID vaccines was their main revenue generator. But I think that, people still see this as, like potential for a lot of different revenue streams and flu shots. They're working on a lot of other things as well. So I think some people do view this still as the whole value. And healthcare in itself has come back. So even though this may not be a value healthcare stock, healthcare in itself is value. And that has kind of rising tide lifted all ships, probably helped Moderna as well.
I want to do Target here real quick before we go to Laura Chico. She just joined. We'll get to you in a couple minutes here, Laura. Target announcing right after its earnings report, which is kind of interesting. Target announcing that they are rolling out this strategic growth plan. Retailer, I'm going to read a little bit from the press release here. Retailer plans to invest an incremental $2 billion in 2026, including more than $1 billion in additional CapEx and $1 billion in additional operating investments. And their focus, their 4 focus items here are going to be lead with merchandising authority, elevate the customer experience, accelerate technology, where they did mention AI, and also strengthening their team and their communities. They're going to be doing things like improving the floor plan layouts. Again, they're going to be trying to find ways to leverage AI. And for a name like Target, when we get something like this, it's just like any bit of relief. This is a name that people have been, saying, is Target going to turn it around? And whether this growth initiative is favorable or not, it shows that management is at least considering it and they're trying to do something here. This has been a name that Mitch has been really liking, and analysts are pretty favorable here this morning. The stock got a couple upgrades, not related to their earnings report. This was just related to the growth plan. Also had 4 or 5 price target raises on the heels of this. Dennis, what do you think about Target here?
Well, the stock just bit dirt cheap. Like, it just got too cheap. When it's down in the 80s, it was trading 10 times earnings. So, I mean, unless you think Target's actually going out of business, it's hard to be a seller down there at that kind of valuation. We've seen these stocks that had these sub 10 multiples that everyone absolutely hated in October of last year. Like the Bristol Myers, we talked about that at 7 times earnings. Merck was like 11 times earnings. All those stocks have exploded. We've been in a value market. Target fits that script. UPS was another one, trading like 11 times earnings at the lows. Well, they've come back a long ways because you know what? If you're in a value market, these things trading 10 times earnings are so attractive. They sell the 100 times stuff and buy the 10 times stuff, and that's what we've seen. And now, obviously, we've expanded here to a certain extent here into a lot of different names. Target's multiple is now up to 14 times, so it's not as cheap as it once was. But when you look at Walmart at 40 times, at Costco at 40 times,
Sure.
and Target at 14 times, it's not like rocket science to think there's still probably room to the upside here. So hard to get off the Target bandwagon, I would say. I'm not fully, I haven't been on this stock. I haven't been trading this stock, but I do think that there is the potential that this stock could actually continue to move higher.
All right, let's go to our guest for today, folks. Laura Chico, Managing Director, Equity Research, Biotech at Wedbush. How is your morning? How's your week going?
Good morning, Brent and Dennis. Always excited to be here. Going great. Thank you.
Awesome. Glad to hear. Glad to hear. So let's focus on a couple names here that are under your coverage universe. First one of your top picks, Viridian, VRDN, and I'll pull up the chart here in just a sec.
Yeah, and this is actually our top pick for 26 and on our best ideas list. So Viridian is actually pretty interesting. Cash, catalysts, and call options in the pipeline, I think, are the 3 things that I'd emphasize here. So right now, they have their lead program, veligrotug, under review with FDA for thyroid eye disease, autoimmune disease that is really rare, but targets the inflammation around the eye. And I think this is pretty exciting. We've got a PDUFA date coming up in June, towards the end of June there. Also coming up more imminently, though, Reveal-1 phase 3 data for their next-gen asset, which is an auto-injector. This would be a little bit different, also thyroid eye disease, but something that you can take at home every month or every other month, depending on how the data looks. And I think this is really exciting. So right now we've got Tepezza that's approved and in the market, kind of at about a $2 billion run rate. Thyroid eye disease products from Viridian would hopefully change a little bit how we're treating those patients today. Right now, Tepezza is administered IV every 3 weeks. With the Viridian programs here, you're looking at a shorter infusion time for the first one. And then, like I said, auto-injector, kind of an Ozempic-like pen device coming out would be about a year later. So I think you've got a couple catalysts coming up. As I mentioned, they've got a good cash runway here. And then there's additional things in the pipeline that's really not factored in the valuation right now.
Laura, can you explain PDUFA Day for a lot of obviously people who don't follow the biotech sector?
Yeah, sure, Brent.
Great question.
I think PDUFA date means this is the day that FDA is going to issue a regulatory decision. So right now, The FDA is reviewing the application, and then on June 30th, by that date, FDA will either give them a thumbs up or thumbs down for approval. And we kind of have Tepezza from Amgen as a good proxy here. The filing from Viridian looks very similar to what Tepezza used. And I think the fact that they got priority review, that means a shorter review time from FDA. I think that's also encouraging to see. So basically, that's kind of a firm flag in the ground there. Now, FDA has been a bit of a wild card this year in the past 12 months or so. Sure. But that being said, I think we take a lot of solace in the fact that Tepezza did get approved with a similar package here.
I don't know if we've ever asked you this before, Laura, but like in the realm of FDA trialing and phases, how important is a PDUFA date for a stock? Is this more important than, different example in the other way, but getting a CRL, we know that is very usually negative for a name. How important is a PDUFA date for a stock?
Very, very critical, obviously, for the biotechs. It's in many instances, you're transitioning from a development stage company to a full-fledged commercial entity, which could happen with Viridian. And I think, we've seen this trend in terms of PDUFA dates more recently. Unfortunately, the way that we track it is you can have one of three outcomes happen. You get approved, you get a rejection or a complete response letter, or you could get a delay. And we've seen this happen a little bit more frequently on the delay side, where something called a major amendment happens and FDA extends that deadline by 90 days. Great example, we saw this happen in January with Travere, TVTX. And unfortunately, you see the stock kind of whipsaw down and then came back up.
Yeah.
So very critical moments for many of these companies. Historically, you've also had this trend where it was by the approval, sell the launch. And I think that is kind of unwound a little bit in more recent years, but definitely super critical for all these names.
Okay, let's get to a couple other stocks here. I know one that you've been looking at recently, Edgewise Therapeutics, it's ticker EWTX. Tell us about this one, please.
Yeah, and this is probably another SMID cap you've not heard of, but this is a $3 billion, we call it the 1-2 punch, both muscle-focused programs, one on skeletal muscle and one on cardiac. And I think probably the one on the cardiac side of the house is more in focus for investors right now. Edgewise is going to have data on their program, EDG 7500. This is phase 2 in a rare cardiac disease called HCM. This is kind of a thickening of the heart. And the data that we're going to get there is really clarifying more on the efficacy side of the house here for Edgewise. Camzyos, which is approved from Bristol, is doing about $1.5 billion. It falls into that family of drugs. And I think it'll be really interesting to see, part of the limitation there has been you can't dose these drugs very high because of the tolerability or the safety side effects that pop up. Hopefully with Edgewise, we're starting to see a decoupling between that dosing and the safety. And that'd be fantastic if we see improvements in efficacy, but no safety limitations there. So that data is coming out in the second quarter. The skeletal muscle program is for a rare muscular dystrophy called Becker muscular dystrophy. I don't think there's a ton of credit in the stock right now. I think most of the attention, as I mentioned, is on the cardiac side here, but very parallel to, I think, Friedreich's ataxia, which is where Biogen acquired Reata for $7 billion. So I think that's definitely one to focus on later. That catalyst comes up in the fourth quarter for Edgewise.
Laura, you got another one here, $8 stock, BioCryst Pharmaceuticals, BCRX. What's the story here?
This is our value play. That's not necessarily a value play, but I think we have really fallen in love with this one for a couple of reasons. So one, they've got Orladeyo, which is on the market, approved today, management guiding to over $625 million in revenue in 2026. I think the big pushback from the bears has been that Orladeyo's days are done. And I think our data really kind of counters that. This is in a super rare disease called hereditary angioedema, or HAE, where you have random swelling attacks that can occur in any part of your body. Unfortunately, when they occur in the larynx, that can become fatal. So patients take Orladeyo every day to prevent these attacks from happening. So you can see there's kind of a huge medical need for this. I think investors are concerned about the longevity of Orladeyo's revenues. I think it's going to be stickier than people think. And then what you're getting right now here is really an underestimation of the potential of Orladeyo. trading at about 3.5 times projected revenue for this year. Peers usually trade closer to 6 to 7 times. I think what's also underappreciated, though, is the pipeline. You've got a readout coming up later this year in an ultra-rare skin disease, totally not in the stock here. If that hits, I think that adds about $5 to $7 to our valuation. And then they just acquired another HAE program called Navenibart. We'll get data from that in early 27. So right now it's all about commercial, but later this year it starts to kick in terms of a pipeline story too.
And I don't think you mentioned it. What's your price target for BioCryst?
Right now, a $22 target. I know the stock's trading
22.
around $8 or $9 right now. So I think you've got Orladeyo generating, really pushing the company into profitability at the current levels, which has been great to see. And like I said, you got some pipeline plays. The Netherton program, which is that rare skin disease, not in our estimates right now.
It can't be easy to get price targets for biotech companies. Maybe use EWTX for an example, because I don't know if we went over the price target. But like, how do you get to a price target for like an EWTX? Can you walk us through that a little bit?
Yeah, absolutely, Brent. So I think the easiest way, well, the way that we approach it is really on kind of a sum of the parts DCF basis. So actually modeling the potential cash flows from each of the programs that we think will get to market, and then discounting that back. I think at least in the case of Edgewise, you have a good example with Camzyos, as I mentioned, for Bristol, that's been approved. You also had an acquisition there with Myocardia. That's where Bristol got it from. So you can kind of triangulate off a couple of those. And similar with BioCryst, while we're using kind of a revenue multiple there to derive our price target, we do a similar DCF analysis with Viridian and looking at the potential cash flows from each of those programs to kind of derive that. Where does upside come in? That's where, if we can unlock additional pipeline programs, if uptake is better than we think, that's where you kind of start to unlock that future value.
Gotcha.
Laura, let's talk Biogen. This is a stock that nobody talks about anymore. Like, it's just been sitting around. Obviously, it was a very exciting stock 5 years ago when the Alzheimer's drug first was going to get approved. Stock went from 250 to 450. It's just leaked. Like, what's happening with this company?
And it's in a turnaround, and they did, I think, undertake a real retooling of the company, if you will, when Chris Viehbacher came in. And hats off to him. He's really reorganized the cost structure side of the business, so really reining in expenses, and that was much needed. The remaining Fit for Growth initiative, though, I think where we see the value unlock is getting that revenue growth piece to really come into play. And some of these newer programs, you mentioned the Alzheimer's effort, that's where I think from our side, we've seen it's really difficult to match the revenues that we've seen in prior years. And I think that's where we're kind of stuck. Like I said, they've done a great job reining in costs. It's just, where is that missing piece in the revenue growth part of the equation? Leqembi and Alzheimer's disease is going to really have steady growth this year. I think this is not one that's going to have a fast inflection point. And we've started to see Kisunla from Lilly kind of catch up there as well. So there's some things they can do, but I don't think that really catches on until 2027. So then, other growth programs still kind of need to come into the picture. And I think it'd be great to see them start to go explore external assets that might make sense to expand the franchises. But yeah, I think a lot of the legacy programs are continuing to face competition, both from branded agents and generics, unfortunately.
All right, Laura, Chico, we always appreciate your monthly or so updates in biotech. Laura Chico, Managing Director at Wedbush for Biotech. Thanks for joining us today.
Thanks, guys. Appreciate it.
All right, have a good day. All right, Triple D, let me pull up any price action, any exciting action in the SPY since...
Well, we just keep chopping around. So, we sold off substantially right before we started the show. Now we've rallied about 30 handles here. I mean, this is all just being driven by every single headline that we get from social media, every single headline that we get on updates from the Middle East. It's completely driving the bus here. I think there's hopes here that, talks could start here. If we start getting talks, maybe this war, could calm down or potentially end sooner than we hope. I mean, obviously, Trump's timeline's been 4 to 5 weeks here. We don't know if that timeline is realistic or not, but that's what they were hoping. But obviously, the markets, don't like the uncertainty of war here. Sold off. on talks of truce or talks just of any talks, the market's rallying on that right now. So I think this is the hopes of talks rally here this morning.
I think you're right. You want to get to ratings? A couple ratings here?
Yeah, do it. Let's do that. We're at the intro.
All right, I'm gonna pull up my Fly platform here, and we'll get a little bit of color. But I want to serve one up to you here to start.
Sure.
Dow Chemical getting upgraded to buy at KeyBank. We have a couple people in the background. Michael Feehan, myself, Joel is usually contributing. Dennis loves the pop in ratings, and this was the one that your mind went right to. Triple D. Why were you so intrigued by a Dow Chemical upgrade? It's a fair question, right?
I mean, it's a value stock, 4.47% dividend. It's the kind of market. It's had a check back here. So, meaning, it's had a pretty good run up, but, we have pulled back in, the recent, last couple of weeks here from 34 down to 29. So I do think this is the check back that should be bought. I think the rating's an A. I think actually I do like this rating. I think I would be a buyer, but Dow Chemical here. Value market continues, 4.47% dividend. I think Dow Chemical's a decent spot to be.
Let me read a little color here from the note. Thanks to Fly. $38 price target here by the KeyBank analyst. The firm adjusted ratings in the chemical space. Okay, so this was like maybe related to a sector-wide note as part of an Iran war commodities playbook. KeyBank sees the war as a positive catalyst for U.S. petrochemicals. It sees upside risk to commodity margins over the next few quarters as rising crude oil prices lift the global cost curve. In addition, the conflict could temporarily tighten global polyethylene supply by 5 to 10% amid low inventories in the chain. And KeyBank also upgrading here this morning with Dow, LyondellBasell, which is, I think, ticker LYB. Maybe
we could do a quick technical on that one here too. So it looks like a sector call here. I mean, same story. Stocks been a consolidation station. Value stocks been coming back here. LYB, similar story, 4.64% dividend. The dividend yields are almost identical. So I mean, this is pick your stock that you want, but I feel like the value rally is for real. I feel like we're in this market here where if value stocks been rallying for 6 months here now. 6 months is no longer like a little outsized, contrarian move here from or counter trend move. It's like a real move here. So I mean, this might continue. People are, lost a lot of money on the 100 times PE stuff. They're making a lot of money on the lower PE stuff. LYB's gonna fit that bill. We could just go and check out, what the valuation on this thing is as well. It's trading at 19 times earnings.
19.
So, I mean, it's cheap.
So
this is where the market is right now. The market likes value. Dow Chemical value stocks.
Let's do a little bit less of an exciting upgrade here. Southern Company getting an upgrade also from KeyBank. More so wanted to highlight this one because they are taking the rating away from an underweight. And I am going to pull up my Fly here. If you just give me 1 sec, I got to switch here in our StreamYard.
Sure.
All right.
Which stock are you going to?
SO.
Oh, Southern. I believe it's to neutral.
Yeah. Yep.
From obviously when you get these, from South.
Go ahead.
And usually when you get these neutral ratings, they don't move as much here. It's major overhead, resistance at $100. Like, or Southern, some of these utility stocks, value, kind of. But when you start looking at valuation on some of these utility stocks, they've kind of been stretched as well. I mean, Southern is now trading at, bring it up, 24 times earnings, 21. So, you got NVIDIA at 17, you got Southern at 21, 22. I don't know. I think at a certain point, some of these value stocks, to Ryan Dietrich's point yesterday, some of these value stocks are leaving value area. So, I mean, you don't want to be paying 40 times earnings for your value stocks, which is why I don't own Walmart.
Yeah, sure.
At a certain point in time, they're no longer value stocks.
Let me read a little color here from the KeyBank analyst. The stock has underperformed its peers as shares have seen historical valuation premium largely disappear. The recent earnings growth outlook revision and the constructive news flow should further support Southern shares. So just kind of like okay, things aren't as bad as they were. One more here, at least one more. Maybe got one hanging out, Triple D. But last night I was looking around. I saw the stock moving pretty substantially last night. LegalZoom, LZ. And I was wondering why. And it got it down. I learned this morning that Barclays downgraded the stock to the equivalent of a sell rating, underweight rating. Read a little bit here.
Way late to the party. I mean, the stock's just been killed. AI disruption
Yep.
going to happen all over the place here. I'm not buying the stock. I'm not saying it's like time to like buy LegalZoom here. I think this is a company that obviously everybody knows is going to get disrupted by AI, which is why the stock has been trading down from $40 a share back in 2021. We're at $6 here now. Does this continue to go down? I think you're going to have rallies. I think you're going to have relief pops. I think that's possible, but I think those rallies are to be sold. Not a fan of
LegalZoom. And at least the Barclays analyst is mentioning this here. The company faces risks that AI native tools may remove friction and make it easier for demand to move online to other services. Barclays finds it's less clear how LegalZoom's current market leadership will perform against the backdrop. In addition, the firm believes the company's growth slowdown and step down in customer growth in 2026 is likely to be a headwind for shares. So, especially in these legal kind of stocks, we've seen a couple pieces of defense from within the industry or within the sell side. Not really the case here for LegalZoom. As far as AI concerns on the legal front, I think this is pretty much kind of like ground zero here.
We have 9 minutes left of the show. We haven't done it for a while. Let's do some ticker tack. Let's come out of here. Give a few tickers. We do a few charts here. Take a look and see what we see. Give us your trading ideas. What do you like out there? What stocks? What are you buying? What's this the chat buying? I tell you what I'm buying all the time. What are you buying? Let me know right now.
We need
maybe I'm interested. Maybe I want to come in, buy some of that.
I mean, that's Dennis. That's a big thing about what's been happening in the STN is the think tank, the STN think tank. I mean, we're all getting smarter because of this. We have some really smart people in there who are bringing information to us that we wouldn't normally have on our radar. Same thing for pre-market prep. Let's hear what y'all are working on here.
First one coming out here. Epic Chaos wants to know about NVIDIA. Did I pick up more for my long-term account? I haven't, but I've got a big position in it already. But I've been saying on the show, last 2 shows, I like it in the 170s. So, and obviously it's working. It's back up 182.50. I think NVIDIA trading here at 17 times 2027 earnings is getting to a point where the stock is getting cheap. Now, again, on current earnings, 22 times, but projections are that's going to increase, in 2027 as AI isn't going away. And this is still the AI company of AI companies. 17 times 4 2027. If I didn't own NVIDIA, I'd buy it. 177.
Oh,
I've got to stop. I like the stock.
Let's do SanDisk here for Annie Hilario. I think I seen her asking a stock that majorly in focus the last good few months here, and it's taking a little bit of a backseat here, as you can see. Definitely just a little bit of a consolidation area. Kind of crazy to call like a 100-point range consolidation, but that's what happens when you're near a $700 stock. Any thoughts on SanDisk?
Good trade on this in the STN room last night. We talked about that they were presenting, I believe, at the Morgan Stanley Investor Conference last night.
The Tech Media Telecom. Yeah, it was like 7:30 p.m.
7:45 last night. Yep. We told everybody in the room that they were presenting. I bought the close and I bought more on the dip last night. Rewarded for that, obviously. Stocks up 21 points here this morning. I just thought I'm probably going to be saying like they're doing well. I never actually did hear what they said, but stocks started popping off right around 7:45. So you can see last night on the chart it started popping off. It really did, even cool off, too much here. So continue to move up at 7:45. I mean, knowing what these things are, these events and what they're going to be presenting are catalysts. That was Absolutely. A pure catalyst trade. Stock is up this morning. I'm sure they said some positive stuff. The stock would be up $20. But SanDisk, longer term. Valuations attractive, but again, it's all depending on where RAM pricing's going. It's all about memory. So if memory, demand starts to slow down, then the stock's going to start to obviously, come down with memory prices. But right now, there's no sign of any slowing in memory.
I mean, I think to your point a little bit, Dennis, I mean, when it's catalyst trading, sometimes it doesn't even matter what they say. Sometimes the fact that they are just talking in general can be a catalyst. It can just be a little bit of a favorable, mention. Why would management want to talk if they're majorly concerned about some business? I mean, talking with management in general usually means that they're optimistic. They have some news, some information that they want to get out there. So catalyst trading is huge in the STN room. Triple D, I picked out the SanDisk. You pick out the next one that we'll take a look at here.
Well, let's go back and look at the list here. So I'll try to just grab who was the fastest up there. So if we just go, NVIDIA was there. Rastar, Bell, wanted GLW, talking about Apple Glass. I mean, it's hardware. GLW, even though it's glass, it's hardware. This is like they're making all your glass, your iPhone, your glasses, a lot of other things. Like what's hardware? So, I mean, GLW is a hardware play, and it's been a fantastic hardware play, and hardware has been so hot. We've been talking relentlessly. Energy, hardware, necessities. This is where we've been. I don't think any of that changes here. So, you know, on dips, GLW, probably a buy. So, valuation, is it attractive here? Well, it's stretched. I mean, GLW, and again, we're in a CFA environment where valuation matters all of a sudden.
Yeah.
It is trading 47 times forward earnings, so it is not cheap. Do I like
Yeah.
it better at 100? Yeah. You get a shot at 100 again? I don't know. And those earnings are probably going to go up.
Well, like here's a thought that I don't know if we've necessarily talked about. I mean, is there a glass panel that Corning is providing in an iPad or an iPad mini? I mean, right?
All of it.
I mean,
There's glass in everything.
Yeah.
This is why it's a hardware play. People think it's a glass, but it's not. It's a hardware play. It's an AI hardware play. So that's, you know, just there's so many of those. Like just go into your Gemini. You know, we've done this exercise before. Go with ChatGPT, whatever you want, and type in hardware AI stocks. You know, and you start getting them. You know, if there's software, they've been out of favor. Can software have a relief rally? Yeah, you know, maybe I should just bring, you know, ServiceNow into the equation here. It so quietly wants to go higher. Bill McDermott buy stock when he said he was going to buy stock, believes his company is tremendously undervalued, says the stock will re-rate higher. It's, you know, moved up 15% from the lows. Software has bottomed. Now, is that the bottom of all bottoms, or does it get disrupted again and something else happen? That's still to be determined. But overall, you know, am I investing heavily in software here? Probably not. Am I trading stocks from the upside? I was long ServiceNow again last night. So, I mean, yeah, I'm doing these trades, you know, and obviously we take them, you know, if we're looking at the STN room, I try to post all the ones that I do at the close, you know, and just looking at opportunities, a little bit of technicals, but also looking at when sentiment has shifted. Right now, sentiment has shifted for software. That doesn't mean these are great long-term investments, but it means they're oversold bounces that you could trade.
And this is Triple D. This is your reminder to do, and also a little tease for STN. This is your reminder to do the hedges tonight when you post the alert.
Well,
right?
yeah. So I always hedge, but I sometimes don't put the actual. So what we do at STN is I do these closing trades, overnight trades, stocks that I like. SanDisk was one of them last night, you know, like catalyst-driven trades. And, you know, I just post the ones that I'm doing. I always trade market neutral, so I short some Qs or short some SPYs against these positions, especially in a wartime environment here.
Of course.
So, but sometimes in the STN room, I don't post the hedge. I just assume you know it. But, you know, some people don't realize, oh, yeah, I'm going to kill on that thing. I'm like, well, the market's getting killed. Did you hedge? So I've always traded market neutral. It's why, like, people say, how are you so consistent every month? How are you know you've been consistent? It's because I'm trading market neutral. What does that mean? It means I do a little bit of short. So the markets implode 2% yesterday, while I've got Qs and SPY short against some stocks that I own to try to like cushion the blow. A lot of people don't like trading market neutral because they just think the market goes up over time, so you're just wasting your money. What market neutral does is it smooths your earnings curve, though. You don't have where I lose 10 grand, then I make 10 grand, then I lose 10 grand, then I make 10 grand. It's smoothing that earnings curve and trying to just extract the alpha out of your strategies more purely. So, you know, trying to, you know, reduce market risk. You can never eliminate market risk, but try to reduce market risk.
And, you know, that capturing some of that upside because the market always goes higher. I mean, that's what your long-term investing account is for. We're talking about the trading account here, right?
Completely separate account.
Completely separate cards.
You know, I try to post when I buy something in the long-term investment account too. We've been doing that since March. I post all my new long-term buys. Some are good, some are bad. I've always said I'm a better trader than I'm a long-term investor. That's why I have the majority of my money in my trading account, but I always have, you know, a long-term investing account too, where I'm invested in NVIDIA and AMD and these stocks long-term. You just hope, you know, that thesis plays out over time.
I want to do one more ticker here for Milan Patel, UNH, a stock that we have not talked a ton about recently. How you been feeling about like a name like a UNH recently, Triple E?
Sorry, I had to go off. My nose is running again.
Oh, you're fine.
UNH.
I know. I saved the tough one kind of for last.
I don't know. I mean, Buffett picked it up. Greg Abel stock. Now, Greg Abel's going to be on CNBC, by the way, tomorrow at 7 a.m., I believe.
Oh.
So catalyst for Berkshire as well. 3% dividend. It's been really beat up. Chart looks like crap though. Stock's been in a value market here, and it's not rallying really with value stocks here. A lot of problems at UNH. I have to say too many problems for me. I'm not going to say it's going up or
Cool.
down, just too many problems.
Gotcha. All right, folks, we're going to wrap it up here on pre-market prep for this Wednesday. Mark Chaikin from Chaikin Analytics will be joining in STN room at 10 a.m. We have Mark on, I believe, it's every Wednesday to take a look in the Chaikin Analytics and see what the power cage is doing. A reminder, folks, Options Unchained with CC Legator here on the pre-market prep YouTube channel at 1:30 p.m. I'll be hopping on with CC, and we'll be seeing how he is setting up for the end of this week, folks. Thanks for tuning in here on pre-market prep. We're going to be jumping over to the STN room. Have a good day, everyone.